Hello, it is Wednesday, the 17th of December, 2008, and this is Brian Shannon from alphatrends.net. We had a pretty choppy session in here today. The NASDAQ 100 finished with a loss of 37 cents or 1.2%. You can see that it still remains trapped right around that declining 50-day moving average and below this important level that has been resistance here for really the last month or so. The uptrend line obviously continues to hold here, looking at the 30-minute time frame, and we can see that $30.85 or so is where that resistance has been coming in. We can see it a little bit more clarity here on the hourly time frame. But we've got this uptrend still intact with these higher lows in here. Yesterday we had seen, of course, that this important level near 29.60 was recaptured prior to the Fed meeting, and then after the Fed meeting we had seen some further strength. Well, today we saw a little bit of sell-off on the open, and then the market came down, and then it came back up and recaptured this $30.20 level that I had posted as being important on the blog earlier today. But then this afternoon it was just really choppy in there. So I had posted a video of a losing trade that I had done in the QLD, so that's only on my blog. That's not going to be uploaded to YouTube. So if you're one of the people who just looks at my videos on YouTube, be sure to go take a look at alphatrends.net. The real important level for this market continues to be this $30.85 or so area, and again, that's also the the approximate location of the two-thirds retracement from the election high to the recent lows. In fact, almost dead on. So that level continues to be important. If the market can break past there, then I think that there'll be some short sellers who could panic here towards the to the end of the year, and perhaps we could see this market go on up towards some of these other levels where we might find some resistance. For instance, first of all, this level just about $32 a share that had been first of all this area where the market gapped lower from and then found resistance once before. So 32, 32.10, and then if it can be move beyond that, then we might be in a position to move back up towards those election highs. This 29.60 is going to continue to be very important here. We've got 2 days left in the week, and we do have options expiration on Friday as well. But 29.60, that's where we have the 5-day moving average. That's also this level that has been heavily contested recently. So really not much reason to get super aggressive in either direction yet. So you're best off preserving capital until we get a better message from the market, something more clear in here. Semiconductors did close above their 50-day moving average for the second day in a row, but still just below this area here where we had seen prior resistance from the 13th of November. So that's this level right here, and again, that's also, let's take a look, I'd forgotten actually, the two-thirds retracement, right? So that's also the two-thirds retracement from the election high to the lows that we had seen on November 21st. That two-thirds retracement is also important here. Breaking past that, perhaps we get a move up towards about $19.23, then maybe up near about $20 a share. As far as support goes, I think you want to look at this trend line, looks important in here, and that also lines up with about $18 a share, where we had some recent resistance that is now also this level of this higher low here. So I think $18 a share is going to be important for the semiconductors. Breaking back below there, then I think we could probably go more neutral in the semiconductors. The Russell 2000 was up 44 cents today. This market group continues to hammer away at this level that has been resistance here for the last several weeks, and looking at the hourly time frame, we can see in here that there's still encouraging signs within this overall bigger mess that we're in. Basically, taking a look at this downtrend line, you can see that that's been broken since the September lows, and we do have these higher lows in here that continue to hold up. But this level in here, we've got some pretty clearly defined areas of resistance in all these markets, and I think maybe moving past that $50 level, then perhaps we could see this market up near 52 and maybe even a little bit higher. Of course, support will have to hold if that's going to if any bullish scenario is going to unfold from here. And I think that these two levels, basically 48 and then about 47 and a quarter, are going to be important to hold. Again, I need to remind everyone that we are in a primary trend lower. We've got a declining 50-day moving average, but we could see similar to, I've been using the example of the Chinese market. This market is still in a downtrend as well, but we've seen a nicer bounce in here, and perhaps we'll see that if the Russell 2000K got above 50, then maybe we start to make a run for these higher levels. You still have to manage risk. There's still a lot of bad news, obviously, but only price pays, and you have to listen to the message of the market, and it's spoken right here on these charts. So 40, even this little low right here, I think breaking below 46.40, then we probably head down to that 48 level, and then about 47 and a quarter in the Russell 2000. The financials look like maybe they're going to make a run back up above that $13 level that's been so important here for the last several months, really since early October. We've got this downtrend line here that's also still intact. If we take a better look at that on the hourly time frame, you can see here it looks like that. And then this is another trend line I had drawn in yesterday, which continues to hold as resistance. We do have these higher lows in here. So all these markets are at pretty critical levels. $13 in the financials is important, and if it can get above there, then perhaps it runs up to 14, and above 14, then I think you're really going to start to see some of these short sellers begin to question their position, because that's where we have this trend line also meeting with these prior highs right in here. So these markets are at important levels. You don't want to take a big directional bet until you have more evidence of what the trend may be. This market is very choppy, and until it becomes clearer, just go slow. The SPY, the big level in here is about 92. Obviously, that's where we've had this resistance recently. We do have higher lows also leading up in here. We've got the market closing above the 50-day moving average. The 50-day moving average declining, so we can't quite trust it yet. But we were off 1% in here today. As far as the intraday action goes, it did close above the 2-day VWAP. So basically, since the Federal Reserve cut interest rates yesterday, the average participant in the equities, as measured by the SPY, is in a winning position. So that's going to put a little bit of importance down near that 90.50. I think today's lows will probably be a little bit more important, down near $90 a share. And we've also got, of course, below that, this level that was a little bit of resistance yesterday at about 89. That's also where we see this 5-day moving average starting to rise up. The bigger resistance level, again, it's actually about 92.40 right in here, 92.45 or so. And you can see that, as we back up on more time frames, that level is becoming more important. If it cannot be overcome here over the next, I would think the next 3 to 5 sessions, if this level can't be overcome, then we might see the sellers get more aggressive again. There just aren't any real clear signals yet, so you've got to just continue to take what the market gives you on the shorter term time frames.